Hi guys, this is Julie. It's Tuesday, October 11th, 3:26 p.m. The markets have just closed. Take a look at the disclaimers and CFTC rule disclosure on my website before trading. I want to talk about the broad market today, the ES. It sold off today. We had a big down day, but we did not really get below the volatility level on the daily. We did clear the sideways price action somewhat, so I would expect to see a continuation move down this week, and want to talk about that as the market is expected to sell off overall because of the overvalued nature of the E-mini right now. Here's an article on CBS Money Watch that turn the little advertisement off, that tells you how to measure if stocks are overvalued. This came out on October 5th, and you know, we've got to look back at what we're looking at now. Banks are in big trouble. They can't make any money. Wells Fargo was phoning accounts up just to get fees to get itself, you know, staying afloat. They have a big boat and there's a lot of people that they're employing. So Lehman Brothers collapsed. Sounds familiar. Deutsche Bank. I mean, are we getting back into this cycle of, you know, the accounts, we can't believe what they're posting, so they're going to be collapsing? You know, I don't know. But I can say that the price to earning ratio is stretched. It's overvalued by about 15% on the forward P&E, and as to historical averages, 15%. Currently, the S&P index stands at 24.81. 1 year ago, it was at 20.59. And we are definitely overvalued and in line for a correction. Here was today's price action. It did get down to the 261.8. So it was, and then it bounced back to the yesterday 200. I still think that the market's going to go down considerably from here because of the fact that everyone's expecting the correction, number one, but number two is the fact simply that there's no growth. We have a GDP at 1%. There's nothing to sustain a rally except the QE, which is being diminished. They're taking the QE off the table. They're going to be raising interest rates, which is pushing the dollar higher. And with a flat to zero GDP, that is not going to bode well for the stock market. For that fact alone is what I'm trying to say to make a long story short. I think that we're going to get a correction, and 10 or 15% correction, as a matter of fact. So this chart here is the yearly chart. I have it on a 1440 minute, so there's no gaps. But this is the yearly value, my pivot, my river of gold. And you can see here, blow this up, the price went right down to the point of control and bounced. So we are trading above the current value. Here was last year's value. Let me put last year's river of gold on here. And it falls in line with this year's river of gold. So you know, you've got two 25% value areas that's serving as a gigantic bullseye. So if you're wondering where the stock market is going to go, this is it. This is it. And besides, it's sitting here on the last pivot. So there you go. That's my two boxes for the E-mini, and that's where I am going to be taking an educated guess that that's where I think price is likely headed to. It's certainly not going to rally up. I heard one guy on TV today saying he is back on his 2250 target for year end, and I think he's drinking his own Kool-Aid. There's nothing, there's no QE. They're taking QE off the table. In Europe, in Japan, they realize that this negative rate stuff does not work. They're going to have to start raising interest rates so that they can pull it back off the table when they need to. So I'm expecting a November 25 and a December 25 myself. But maybe I'm getting a little bit ahead of myself. Maybe it's only going to be 25 in December, but you know, everybody in the market is expecting something in December. So here is the price action. It is starting to break down. It's not going to get down to 2020, 2022 in, you know, a matter of a day or a week. But I think it's heading that way. And so how do we trade it? I have my direction guide template. When it is going all four in one direction, you know that you can trade that market. When it's empty, step off the gas. Do not take those shorts anymore. When it's empty here, you don't have as much of a reason to, you know, try for a range expansion at all. But when it is exceeding the current high-low, the prior high-low, and the open to close and the direction, then try to step on that pedal and see if you can get it to move. Obviously we weren't able. This was like a little stop run up here. And as far as getting back up there, I'm not sure you ever will. I mean, you could, but my guess is this is going to just start rolling over. And we had a very low close today. We exceeded the current pivot low. We made a new low. And so tomorrow I'll be looking for a lower high below this area. So somewhere between these two levels. Like yesterday low. Might be a good place to look for another turn down. So just, you know, thinking out loud, if it's going to start rolling over, it's going to start rolling over. Otherwise, it's just range chopping and not tradable. So how do you trade this market action on the smaller time frame? I use my custom Unirinco bars, and this is a 4-8 chart. If you think that's too big, 12 ticks, 3 points is too big for you to trade, to take these trades at that time, you can certainly move this down to a smaller bar. I personally had it on a 2-4 today, makes it a little bit easier to manage. That's a 1.5. And not, you know, that enables you to put on more than one contract pretty comfortably and have a good enough risk so that when you're taking these shorts, you can certainly get behind it and get a position ahead of it. When the market starts moving up, the momentum, I mean, starts moving up, and you start seeing the white on your super trend bar, don't take these shorts, as they probably aren't going to go anywhere, waiting for that deeper pullback. Get your deeper pullback, get back in, and then trade it down. So my bars are wonderful to take these trades with the direction that price is going. And as long as I've got momentum on my side, keep pressing it. And then here we had the momentum flip around and go in the opposite direction. So goes back to the point of control, not the VWAP. VWAP was too high. And that's where we ended up. So use the templates to get positioned. Recognize a big trend day. They don't happen that often in the E-mini. The E-mini is more or less a market that is a range reversion to the mean market. And try to get in on some of this price action using my templates or your own system, using your support and resistance, but definitely learn to recognize how to take advantage of these markets as they do turn around. I do think that we're going to see some downside price action. It's a fact that the market is very overvalued by about 15% according to that article on MarketWatch. So I would expect this to come back to the middle of the current year's value, which coincides with the previous year's value, making it a very hot, target. So shoot for your easy targets and then reassess on what you want to do from that point. If you're a bull at that point, the economy expands and the engines are back on and nobody has to, revert to fraud and enable to sustain themselves. There, I spit it out. Revert to fraud so that they can sustain their, payrolls. And, we are growing our economy. Definitely get back in. But I think overall, there's not enough defense stocks in the world or utilities or value stocks that you could pick up at this point to justify staying in this market right now. In my opinion only. Of course, we've got to trade what we see and not what we believe. And I worry about that when I make these videos. I'm going to bias you guys and I'm going to get in trouble because sure enough, the market will bounce, rally up, and everybody will have their big fat fingers pointed at me saying, but here's the range, the high of the volatility, the low of the volatility, and we're sitting on that low band right now, just sitting on it. So we have not made that close below it on my Heikin-Ashi, but I think that'll get accomplished tomorrow as the market's going to be looking for these stops and then taking it on down. Got the momentum now crossing zero again with a little bit more. We were flat for so long. Now I think it's showing its direction. And if we get another follow-through day to the downside tomorrow, I can definitely see this market rolling over. All right, so y'all be careful. Get a plan on how to trade these short. Here is the inflection short. Or just use your super trend or your reversals. Thank you so much. Y'all take care and have a good evening.